think this is a reflection of what has been an ongoing restructuring of the Chinese economy more towards the called the fourth industrial revolution, as people talk about it, whether it's AI, robotics, and the like. And we're, I think, beginning to see some genuine positivity coming out of that. But more importantly, I think, is just retail sentiment. And the retail sentiment is playing out in Hong Kong via the Stock Connect program, where tons of flows from Chinese retail investors are going down through Stock Connect into the Hong Kong market. Regarding Trump, very simple. China's keeping their cards close to their chest until Beijing understands exactly what it is that the Trump administration is looking for in terms of a deal. They're just going to continue to, appear to be docile, but in reality, just wait and see until they have a sense of what exactly the American policy is on China.
Right. And if that's the case, I do want to get your sense in, Peter, on how you're looking at the China story right now, economically speaking, and where we are, especially with the property sector woes.
Well, the property sector has continued to be the real downdraft for the Chinese economy, but it's been on purpose. And again, I think this goes to the initial point that I was making, which is you could say from 2017, I would argue in reality, in earnest since 2022 and the 20th Party Congress, there has been a concerted effort that has continued to play out by the Chinese policymakers to deleverage the system. And that is focused on two primary elements. Number one is property, where, as we all remember, Xi Jinping had said years ago, property is where you live, not what you invest in. And then at the same time, the need to clean up the local government financing vehicles. And if you noticed from the NPC the other week, the vast majority of the so-called fiscal spending and fiscal stimulus is actually debt restructuring. It's bonds that are being issued to go clean up the balance sheets of the local governments. And this is going to be a process that is not going to be Japan. It's not going to take 30 years. It'll take a bit of time. But as I mentioned at the beginning, you're starting to really see genuine green shoots. I hate that term, but in terms of this move towards a new economic model, and it's playing out a little bit in the stock market as well.
So, Peter, I have a follow-up to that. How far into this housing correction is probably a softer word, but really downturn are we? And are we getting closer to seeing a bottom being put in and home prices? And if so, is that the catalyst to get the Chinese consumer to gain more confidence in their financial condition and situation, that the huge pool of savings that they've accumulated, are they going to start to spend that in a bigger way?
It seems as though there is this continued approach towards a wealth effect with Chinese characteristics, where the government is trying to put a floor and move the pricing higher in certain asset classes, including property, with the idea that this would open up the pocketbooks of the Chinese households. Because again, I think, Peter, what's significantly important and what continues to be missed by most global so-called experts, China is not going to issue any sort of fiscal stimulus to the household. So going with this wealth effect approach and property, to your question, starting to stabilize, I think, or past peak pessimism, is exactly the direction that Beijing is looking to go.